Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson and just before the 790 KBC News Blitz with my pal Randy Wang at 5. And tonight, stay tuned for the Just Help One radio show and podcast presented by the Union Rescue Mission. I'll be back on tonight at 6 o'clock this evening with Mark Hood, the CEO of the Union Rescue Mission, along with Richard Newcomb, the Vice President of Philanthropy and at URM, along with other special guests. So stay tuned tonight in the 6 o'clock hour here on 790 KBC. Right now, it's Mottek On Money. We're live on the air on 790, streaming live online worldwide at KBC.com. And yes, the on-demand Mottek On Money podcast, KBC.com, Apple iTunes, YouTube, all of your favorite podcast platforms. Stocks closing lower today, taking a breather from a sizzling record run-up over the past week or so. The market did cap a month of gains for the month of July, which is now in the Wall Street history books. Tomorrow is August 1st. This has the clock ticked down to the president's tariff deadline of August 1st. The earnings parade to continue. We got Apple today. Apple reported third quarter earnings that topped Wall Street analysts' expectations as well as revenue. We saw Apple reporting iPhone sales grew 13% year over year, and overall revenue grew 10%, Apple's largest quarterly growth since December of 2021. Looks like Apple shares are up in after-hours trading. Apple stock had closed down $1.48 today at $207 and change. We'll take a closer look at all that coming up here in just a moment with a veteran Wall Street expert. We did see the market did close out the month of July with the S&P 500 gaining just over 2%. The NASDAQ closed out the month up 3.7%. Looks like the Dow closed out the month little changed. Investors now turning attention to the president's tariffs set to go into effect tomorrow when new deals will come into place, with the president set to outline deals for the rest of the trade partners, terms for the trade partners. The president said this week that he extended current tariff rates with Mexico, the U.S.'s largest partner, for another 90 days while the U.S. and Mexico work toward a better deal. We did get a new reading on inflation today. The Fed's preferred inflation gauge, we're told, the Personal Consumption Expenditures Index, the PCE index, released today, showed price increases accelerated in the month of June as inflation remained above the Fed's 2% target. This after the Fed held interest rates steady yesterday following its two-day policy-setting meeting with two Fed governors dissenting on that decision. The Fed chairman this week said no decisions have been made about a September rate cut, and now bets on a September rate cut fell below 40% today, according to the latest readings we got on that front. Amazon earnings coming in above Wall Street analysts' expectations. We'll take a closer look at that coming up here as well. And we're also watching what's happening with the price of Bitcoin pulling back a bit today, down to 116 now, down about 700 here at the moment at 116.92. Figma, this is a stock that made a big splash today on its IPO day, surging more than about 250% above its initial public offering price. Started trading today. We'll take a look at that one. That one made a huge splash on Wall Street, along with some of the other IPOs we've seen so far this year. There's a new push this year to make America healthy again. One group that's behind that effort is End Chronic Disease. Coming up later this hour, I'll be speaking to Kelly McKenna, the CEO of End Chronic Disease, at endchronicdisease.org. One issue that's got their attention is getting unhealthy foods out of the SNAP program, formerly known as the Food Stamp program. I'll talk about that and what else is at the forefront of ending chronic disease and making America healthy again with Kelly McKenna, the CEO of End Chronic Disease. Looks like mortgage rates have eased a bit over the past week following the Fed decision to hold the line on short-term rates, and the yield on the 10-year note now at 4.37% has been cooperating with the real estate business. We'll talk about that and more with Jeff LAZERSON, the president of MortgageGrader.com, also Orange County Register real estate columnist. But first, on your money, the markets, the economy, the Fed, the jobs report tomorrow, the whole works now. Joining us live, veteran market strategist Art Hogan, Chief Market Strategist at B. Riley Wealth Management, based right here in Southern California. Art Hogan, thank you very much for coming to the line here this afternoon.
Hey, Frank, thanks so much for having me. It's quite a busy week and plenty for us to talk about.
Most definitely. So appreciate it. You're the right man for the job here. So take it from the top. Give us your assessment here. The record run-up we've seen since our last conversations a little over a week ago, and this sizzling run-up we've seen here to to cap off the month of July with a bit of a pullback, but certainly it's been a record-shattering month.
Yeah, not just the month of July, but I would tell you the S&P 500 is up about 29% from the lows in April, and all of that sort of coalesces around the fact that we felt like we got a better feeling about trade and trade deals and tariffs, and we certainly did around the UK and then the Eurozone, and the negotiations with China are going well. So all of that sort of worst case scenario pricing has come out of the market. Along the way, though, the earnings season has been so much better than expected. So after the first quarter earnings reports, nobody gave guidance because there was so much uncertainty over trade and tariffs. And the expectations for earnings growth for the first quarter were something like 12%. They went down to 4%. And now we're seeing almost 9% earnings growth across the board for S&P 500 companies. That is so much better than had been anticipated, and that's with 50% of the index already having reported. You can see that in companies like Meta, Facebook's parent, and Microsoft yesterday, Apple, and Amazon. So the earnings season has actually been a very positive catalyst, and I think the expectation set was so low. Now, what's going to happen next, Frank? And I would tell you this is something to be very careful about. Markets at or near all-time highs heading into the month of August and September. These months are very difficult for markets. So even with good news, the reaction function sometimes can be some consolidation. So I wouldn't be surprised if over the course of the next 2 months we see a little bit of a pullback, call it 5%, maybe 10%. But I think the fundamental backdrop of the market looks really good. The economic data has been much better than expected across the board, whether, it's tomorrow's jobs number comes in at or near the expectation of 115,000. We're creating somewhere between 100 and 150,000 jobs a month. Inflation seems to be okay. It picked up a little bit in the PCE today, the personal consumption expenditure. But I would tell you this. We're in a much better place now than we thought we would be in the first week of April.
On the Air Live with veteran market strategist Art Hogan at B. Riley Wealth Management, and certainly a lot of the uncertainty that started this year has been lifted with the big, beautiful bill and other things that have fallen into place here with the trade deals you mentioned, and still more to come. And what about the Mag 7? Some of the names you mentioned just now, to see these kind of eye-popping gains for Microsoft, for example, above 533 now. Meta up more than 78 today in one shot at 773 and change. And we see some of the, of course, NVIDIA hitting record highs recently, pulling back today to around 178. What about the Mag 7 names here now?
Well, I'll tell you this. So we spent the entirety of the first quarter de-risking portfolios. You saw professional portfolio managers getting out of technology, communication services, and consumer discretionary. And that whole group sold off. And then, into the lows of the market between April 2nd and April 8th, we hit a crescendo low. And since then, that de-risking has completely reversed itself. So we're making new highs in stocks like NVIDIA, Meta, Microsoft, and we'll likely be making new highs in stocks like Amazon and Apple because of the fact that the AI revolution is still intact. The CapEx, the money companies are spending to develop large language models has not slowed down, and we're in early innings. So I just think that while people get concerned about the concentration of the investment in the top 10 mega cap technology stocks, it's because of the massive amount of spend that's going into this. And this is reminiscent of things that we saw back in the internet days, only that the major difference, Frank, is these companies are making massive amounts of money. So to me, I think it's a healthier market than since the last time we talked, and certainly since a month ago. And I think that the earnings results are surprising people to the upside, and I think that's all well and good. The only thing that I would be concerned about now, Frank, I think it's important to note that when we get into August and September, we can have a slowdown in markets, and we can certainly have some pullbacks. So I wouldn't be surprised whatsoever if we see some mild pullback in the S&P 500, and certainly that could be led by, some of the AI darlings.
All right, so much to unpack here. We have the Fed meeting, too, which just wrapped up yesterday, two-day policy-setting meeting. Looks like there was some dissent among the Fed policymakers after the Fed chairman made the decision to hold the line on short-term rates and this battle that continues to play out between the Fed and the White House. What do you expect the Fed's next move will be? And P.S., what are we expecting tomorrow when the jobs report comes out?
Well, I'll tell you this. The jobs report is probably going to start to cool off. We've averaged 150,000 jobs created on a monthly basis for the last 3 months. The first quarter, we averaged 175,000 jobs. So it's obviously slowing down. The weekly jobless claims have picked up a little bit. They've gone from 210,000 to 225,000. So obviously there's going to be a bit of a slowdown in activity and job creation. That said, I would tell you, if I was the chair of the Fed right now, and we have a 4.1% unemployment rate, and the PCE, which just came out today, is not showing massive acceleration in inflation, you'd be hard pressed to say we need to make a decision right now. I think what the Federal Reserve needs to do is wait another month or two, and that'll get them to September, to say, okay, now we see the totality of the data since the tariffs have been put in place. We've seen the one-time price increase of goods, and we also expect a bit of a slowdown in the economy because the consumer is going to pay more for goods, and they'll have less to spend on discretionary items. And I think the Fed will wait and see and say, listen, this is what we need to react to. We're too restrictive right now. We'll cut by 25 basis points. Whether it's at the September meeting, October meeting, December meeting, we're going to have rate cuts this year, and we're going to have plenty of them next year, probably a full 100 basis points next year.
Well, so we got that GDP number this week. The economy grew at a rate of 3% in the second quarter, following a 0.5% drop in the first quarter. What's the outlook here on the economy based on your latest assessment?
Well, I'll tell you this, Frank. So if you look at the 3% growth, all of that came from the import-export balance. So the only reason the first quarter had a negative print was we pulled forward demand for goods. So we imported a lot more than we exported. And then this quarter, we didn't have that in balance, so that caught up. So we kind of balanced out. We've got a 1.2, 1.3% GDP for the first half of this year. While that's lower than mean growth, it's certainly a whole lot better than we were thinking about in the first quarter. I think that once we flush through all of that pull forward because of tariff pricing and get into the third and fourth quarter, the economic growth will likely pick up. I think the Fed will look at this as a one-time price increase, cut rates, maybe in October, perhaps in September, but certainly in December. And then we'll start seeing some of the tailwinds that will come with the new administration's policy, like the fact that we know what corporate tax rates are and the impact of less regulation.
On the air live with veteran market strategist Art Hogan, chief market strategist at B. Riley Wealth Management. Another head-spinning day. Apple out with earnings. Usually that would be the very first thing we would talk about, but looks like Apple did exceed expectations here, but that stock's been pretty sluggish compared to the other Mag 7 names. What about Apple here?
Yeah, the problem with Apple right now is all of the Mag 7 names, ex-Tesla, so let's just talk about the AI names, have been spending billions of dollars to develop large language models. And in doing that, they can actually talk about the results that they've had. Apple is a fast follower. They haven't spent billions of dollars to develop their own large language models. So I will tell you, in the future, and whether it's this quarter or next, we'll hear from Apple that says we're partnering with somebody in the U.S. and in China. It's probably going to be Alibaba in China. It's hard to know who's going to be in the U.S. That announcement will drive the sales into the new rollout of their next phone, which comes in the fall. And then people can stop looking at Apple and saying, you're not doing anything with AI. You have to take a long trajectory of what Apple has done, right? So we had cell phones for 15 years before the smartphone came out. That's the only phone that anybody wants right now is the iPhone. We had all of the wearable devices before Apple invented them. We had all of the laptops. We had all of the tablets. Apple is the fast follower. They're going to be okay with AI. They just haven't made that one announcement that is, we're either partnering with somebody or we're buying somebody large. And then people will explode in Apple. I would say if Apple gets down to 190, it's a screaming buy.
Art Hogan, let me ask you about pick up an IPO activity, this Figma. Don't know too much about it, but that saw a pop of 250% from its IPO price today, up 82 and change to 115 and change. We've seen some other IPOs pop this year, namely Circle a month or two ago. What about this Figma and the IPO action we've seen lately?
Well, I tell you, the pickup in capital markets activity is very refreshing. A lot of these companies have been private for too long. They're coming to the public market. Circle is a great example of that. Figma is another great example of that today. When you see all of the names that have been in the backlog to come to public markets, I think that's a voice of companies saying, I feel better about market conditions. We are willing to go out and become public in the publicly traded markets. And Figma had a great opening today. It took until about 2 o'clock to get their stock opened. They priced it at about $33, I think, and it opened much higher than that. I think that starts to open the floodgates of companies that have been private for too long and are coming to public markets. Frank, the other thing I would say on that same front is we've seen a plethora of M&A activity. That's something we haven't seen in 5 or 6 years. So capital markets is really picking up. That activity is very positive for markets. We don't have enough publicly traded companies, and I think mergers and acquisitions that are getting improved make a great deal of sense.
Absolutely. A lot of talk about that among the M&A group here, ACG Los Angeles, focused on M&A activity. They've got their conference coming up in the next month or so, so a lot of action there. What about crypto? We got to talk about Bitcoin hitting a record high not too long ago, above 123,000, now back to 116 or so. What's your view of what's happening in the crypto space?
Well, I'll tell you this. Crypto is, I think, very correlated, and you and I have talked about this for a couple of years. It's very correlated to the risk appetite in markets. So if you look at the NASDAQ 100, the 100 largest NASDAQ stocks, and the crypto, in large part Bitcoin, the chart looks almost identical. So if there's any kind of slowdown at like we've seen in markets this week, where we're not making new highs every day, I think crypto is going to fall into that same category of not risk off, but enough has been priced into this asset class. I think it's got a lot further to go. I think with all the legislation that's going on that's pro cryptocurrencies, whether it's for stable coins and the Genius Act, I think the future is bright. But I just think when you get to 123, you need to pull back and consolidate. And at 116, 115, I think it's probably a great buying opportunity.
All right, let me ask you the gotcha question here. Any specific places where you are putting money now and or taking it off the table?
Yeah, Frank, I've never heard that question from you, except every time we talk to each other for the last 25 years, and I love it. So here's the 2 things I would say. I would say, do not sleep on some old technology companies. IBM reported it was disappointing, but they're doing great. Cisco reported they are doing great. Some of the old technology companies are catching up quickly to where they need to be. So 2 of my favorite names right now are IBM and Cisco. On the sell side, though, and things you need to be careful about are things that have gotten way too extended because of the speculative edges of the market. So I'm not going to point out any particular name, but if you own something that is supposed to develop something in the next 5 years, whether it's uranium or quantum computing, just be very careful, because when there's a slowdown in the market, and that can happen a lot of times in the months of August and September, there's a good chance those speculative names are going to pull back much harder than the overall market.
Fantastic, Art. Thank you very much for going through the whole works here, and please send our very best regards to the analyst, also known as the Cavalier King Charles Spaniels, at your place. We'll be looking for them on your social media feed. Art Hogan, veteran market strategist, chief market strategist at B. Riley Wealth Management, based right here in Los Angeles. Art, thank you very much for joining us live here this afternoon.
All right, Frank. Thanks so much.
Thank you very much. And out to the freeways we go now on 790 KBC. Stocks pulling back today on the final trading day of the month of July, but it was a winning month for the major averages. In fact, a record-shattering month. The Dow pulling back 330 points today to 44,131. The S&P 500 down 24 at 6,339. The NASDAQ down 7 at 21,122. The volatility index did spike today, up 8%. The price of gold pulling back $3.10 to 3,345 and change. Oil moving higher, flirting with $70 a barrel once again, right now up 13 cents at 69.39. The yield in the 10-year note which impacts the fixed-rate mortgage rates at 4.37%. Talk mortgage rates coming up in the next half hour with Jeff Lazerson, the president of MortgageGrader.com and Orange County Register real estate columnist. NVIDIA pulling back, hitting record highs this month, pulling back $1.40 at 177.87 after the closing bell. Apple coming in with earnings that exceeded analysts' expectations. The stock had closed down $1.48 today at 207 and change, and up about $4 in after-hours trading. Figma, the big IPO today on Wall Street, up 250% on its IPO day, closing up 82.50 at 115.50. And checking the cryptos now, Bitcoin pulling back down to 116.92 here at the moment. Ethereum at 3,711. Solana at 173 and Doge at 21 cents. And now the latest news on 790 KBC.
Hello, my loves. It's Lala Kent. Yes, that Lala. And if you're not listening to the Give Them Lala podcast, here's what you're missing out on.
I stayed with my 2 kids. Mom and Kristen shared a room, and you and Landon shared a room. What the hell is going on? A lesbian couple, a gay couple, and then this
random woman with 2 kids.
So weird, but to me, it's the most common thing. This is my brother, his best friend, and my mom and her best friend. This is just how we roll. This is called the pod, okay?
Give Them Lala. Follow and listen on your favorite platform.
Welcome to NFL Flag.
Are you ready? Yeah! Are you ready? Yeah!
No matter who you are, lace up your cleats, smear on your eye black, step out on the field and chase something. Chase a goal.
Let's get it!
Chase the big time.
Get down, ladies!
Chase rings. Chase gold medals. Chase all of it. It's all up for grabs now. NFL Flag. Chase something. Visit NFLflag.com to find a league and start the chase today.
Mottek On Money continues here in 790 KBC. A bit of a ray of sunshine for real estate with mortgage rates easing a bit this week, according to the latest reading from mortgage giant Freddie Mac. Joining us live now is Jeff Lazerson, the president of MortgageGrader.com, also Orange County Register real estate columnist. Jeff, thank you very much for taking the call here. And how are the rates looking this week?
Frank, they're flat. That's probably the best way to say it. The Freddie Mac rate this week is at 6.72%. It's down 2 basis points from last week. Locally, though, rates are a lot lower than they are nationally. 30-year fix is at 6.25% at one point. That's up to $806,500. That's a Fannie Mae conforming loan. 15-year fix is at 5.375% at one point. And then the high balance, so that goes from 806,501 to 1,209,750. The 30 years at 6.5% at one point. The 15 years at 5.75% at one point. And then FHA is at 5.99%. And a jumbo, anything over 1,209,750 is at 6.38%.
All right, we saw the Fed hold the line on short-term rates yesterday. That what they do impacts the adjustable rate mortgages, right? What do you see ahead? What do you see ahead for rates at this point?
Well, we're going to have, at least 1, maybe 2 rate cuts this year. I mean, sure sounds like when you had 2 of the Fed members, saying that they wanted to cut now. That's normally not something that they disagree about. So I'm guessing September they're going to do a 1/4 point, and maybe in November, something like that, they'll do another 1/4. But it'll help. It'll help a little bit that, from where things are now. But rates have been flat for so long. It's been 10 months since rates have been under 6.5%, at least as far as Freddie Mac rates go. And it's been 37 months since rates have been under 6%. So it's been a long, dull time out there, and rates have just stayed flat.
On the air live with Jeff Lazerson, president of MortgageGrader.com and Orange County Register real estate columnist. I see some breaking news here, Jeff, from the State Insurance Commissioner's Office. Commissioner Lara taking legal action against the FAIR plan for denying smoke damage claims. Have you had a chance to take a look at that and tell us about that news?
Yeah, so they just had a press release out today. It says the California Department of Insurance filed an order to show cause against the FAIR plan. The consumers are complaining because they weren't getting compensated for smoke damage claims. And the FAIR plan is sort of like a state plan in and of itself. So it's interesting that the state insurance commissioners going after the group of insurance agencies that's the sort of the insurer of last resort. Very interesting stuff that he's really sticking it to them. So hopefully those homeowners are going to get some relief on the smoke damage.
That's potentially a big story here. So thanks for tackling that. That news release that just came out today, and all of this in the aftermath, of course, of the horrific firestorm which devastated the Palisades, Malibu, and Altadena. What other fallout are you seeing from this catastrophe as the recovery effort continues?
Well, so the rental market, rents are up, and they were the state made a big effort so that they wouldn't have rent gouging. So that seemed to work pretty well. They made an example out of one or two people, and that stopped right away. So, but rents are up, and the people in the Palisades are just, scattering to find places elsewhere, Redondo Beach, Manhattan Beach, some coming down to Newport Beach. But it's a long time coming until those areas get rebuilt, unfortunately. I know some people are starting to rebuild, but it's, for the whole community to be back together, it's going to be years and years, and a lot of people just don't want to wait, and so they're selling their lots to developers.
All right, what's your outlook on home prices at this point, especially here in the Los Angeles area? What do you see ahead for home prices for the rest of the year?
Well, I'm glad you asked. The National Association of Realtors just came out with a press release that's saying that pending home sales nationally have been down just under a point and down 2.8% from a year ago. Locally, we're flat. In Orange County, we'll probably be up a point or two for the year, and same with LA and the Southern California region. But it's really flat, and there's just like this malaise and this tiredness out there because its prices are unaffordable, rates are high, and there's just people. There's still people out buying, and if the property is clean and turnkey, it sells right away. But there's a lot of properties that aren't clean and turnkey, and the time on market is really going up a lot. According to Stephen Thomas of Reports on Housing, he was something I put in my column this week. In Southern California last year, the days on market, in other words, till went into escrow, was 83 days. This year, it's 118 days. So that's a 40% increase till things get sold. And then as far as the listings in Southern California, they're up 40%. It was 30,000 and change up. Now it's 42,000 and change for listings. And Orange County's over 5,000 now. LA County's over 15,000 now. So, the inventory is just, creeping up, and the buyers are just, waiting. One thing that we are seeing a big pickup is bridge financing. So if somebody wants to buy another property and they haven't sold their place, what they can do is they can pull the equity out of their house to purchase the upleg or the replacement property and then sell their property later. So bridge financing is getting a lot of play because a lot of people are reluctant to sell until they find a replacement property. And this is one way to solve that problem for them. That's
very interesting. And of course, a lot of attention recently on President Trump floating a tax idea that would eliminate capital gains taxes on primary home sales. So what about that idea, and where do things stand with that?
Well, I think it's a terrific idea, and Marjorie Taylor Greene had actually introduced legislation. I haven't heard anything more about it since that was introduced, but I'm sure it'll make its way through the committee. And if that does happen, if they waive the capital gains tax, you're going to see just a ton of home sales happening. I mean, there's so many people sitting on tons and tons of equity. They've had their house for years, and they don't want to sell because they don't want to pay the capital gains tax. And of course, right now it's if you're a married couple and you have an exemption of $500,000, anything more than that you have to pay tax on. And if you're a single person, the exemption is only for $250,000. So if you waive the capital gains tax completely, you're going to have all kinds of people jumping on that, and it's going to really spike sales.
All right. You're waiting for that, right? How's your business these days?
choppy. We're getting people into escrow. The people that are getting into escrow are competing hard because everybody, it's easy to find the really clean, nice properties, and everybody wants to buy those. And the other stuff, the stuff that's overpriced or tired, those aren't getting much of a look. So people are going into escrow, but it's just not a big volume of buyers. And there's a lot of very discouraged buyers out there because when I tell them how much they can afford or how much they can qualify for, it's a shoebox. It's not even a condominium. It's a shoebox. And so, people get very disheartened, and they end up, a lot of them end up leaving the state to find cheaper quarters somewhere else. And I don't blame them, but it's just so unaffordable here. And I don't know what the answer is other than building more housing, but that's about it. All
right, Jeff. Well, thanks for telling it like it is. As always, Jeff Lazerson, the president of MortgageGrader.com, an Orange County Register real estate columnist, live with us here on Mottek On Money, 790 KBC.
Vince Colonnese is redefining news talk.
Hi, I'm Vince Colonnese, host of the Vince Podcast. These conversations where we can air all of this out without the filters, without the censors, without people with judgment, that's how you get a healthy country. Adult, reasonable, sober conversations. That's all I want.
In-depth interviews, live caller interactions, and a front row seat to the most important conversations of the day.
That's why I'm so grateful that we get to do this every day. You are really the best damn audience in media.
The Vince Show.
Follow and listen on your favorite platform.
Mottek On Money continues here in 790 KBC. I think people are sick of hearing America is consistently ranking lower than other developed countries when it comes to health. There's a new push this year to make America healthy again. And one group that's behind that effort is End Chronic Disease. One issue that's got their attention, for example, is getting unhealthy foods out of the SNAP program, formerly known as the food stamp program. A lot going on the legislative front as well as the policy front on health in America. And joining us live now is Kelly McKenna, the CEO of End Chronic Disease. Kelly McKenna, thank you very much for taking the call here this afternoon.
Thank you, Frank, for having me.
Wonderful to have you with us. Give us your assessment here of the health situation here in the U.S. And the efforts to improve things now.
Yes, happy to. So the health situation, frankly, is the number one most urgent crisis that we face as a nation. This is an issue that impacts every U.S. household. It's not just a health crisis, it's an economic crisis. This is a national security crisis. We spend 90% of our $4.5 trillion healthcare budget, more than any other G7 nation, by several orders of magnitude, on these chronic illnesses. Our life expectancy is the worst of all of these countries, and not only that, but it is declining. We have 77% of U.S. young adults not qualifying for the military due to poor health scores. We now have 50% of young adults with a chronic illness, and we will not survive as a nation if we continue down this path. As you mentioned, obviously there's a lot of activity on the policy and legislative front, which we are thrilled for at End Chronic Disease. Big announcement today from the White House, reinstating the presidential fitness tests in schools across the U.S. I'd say the good news about this crisis is that it is largely addressable. These illnesses that we're talking about, this is things like diabetes, obesity, heart disease, autoimmune disease. For the most part, these are addressable through root cause interventions, and that is what we dedicate our life work here to at End Chronic Disease.
Thanks for mentioning the White House announcement today. Tell us what impact do you think this will have to get kids fit again?
I think this is an amazing step in the right direction. We have, if you look at the amount of time that kids spend outside in school right now, they are getting less time outside than prisoners in a maximum security prison. So instituting movement and fitness is I say lack of movement and lack of fitness is one of the primary drivers of many of these chronic illnesses. So that stuff alone, you look at the population of children in this country who are attending schools, massive impact. We're so happy to see this news. This was a surprise to me today.
On the air live with Kelly McKenna, the CEO of End Chronic Disease at endchronicdisease.org. Tell us about some of your efforts. What else would you like to see happen under this administration, under RFK Jr., and what efforts are you getting behind at this point?
Yeah, well, we continue to be thrilled with the progress that we're seeing from the federal government, whether it's getting toxins out of foods, adding more fitness in the schools. You can see so many national corporations taking their own efforts now to make their foods cleaner. We operate at the state level with our organization, and so we've been very active over the last 6 months in pushing forward preventive health policies. Like I said, at the state level, we've helped pass 25 bills so far this year across 12 states. And these are things, as you mentioned, like removing soda and candy from the SNAP program. SNAP is a taxpayer-funded nutrition program. So the primary goal of that program is to provide extra dollars to ensure that participants can get adequate nutrition. Soda is the number one purchase of that program, of any commodity, and soda has, of course, zero nutrition. So we have been involved in many of those state waivers. We've also worked on 7 school lunch bills. We've worked on getting chemicals out of food supply in some of these states, mandating nutritional education for medical professionals, which is another announcement that RFK has committed to, mandating that universities teach in medical school nutrition. That should be a no-brainer. And many of these G7 nations that we are lagging behind, that is where we're falling short. They are already doing that. And then, we were involved in the Texas Senate bill SB 25, which did mandate physical education in schools, and that was something that we are very excited to bring to more states. So, like I said, this news today is just a wonderful surprise. And I would say that the policies that we go for, these are not controversial ideas. We test these through polling, and you're seeing across the board bipartisan, like 85% plus support on these issues. For example, we helped run a poll earlier this spring that you see 95% of voters wanting fresh fruits and vegetables in every school lunch. You see 96% of voters wanting warning labels on foods with high levels of chemicals. So that is where our efforts are focused.
Well, appreciate you highlighting this. For anyone that wants to support your efforts and get more information about your efforts, what's the best way to do that?
You can contact me anytime, Kelly, Kelly, at endchronicdisease.org. You can visit our website. There's also ways to contact us there, and give us a follow on social media. We're very active in posting the latest updates and helping you understand how you can get involved. As we work in these states, one thing we love to do is bring in people to come testify in their states on the issues that they care about. And it's a very effective way for you to be able to help this crisis on your own. And I would say probably in every state in the U.S. right now. Of course, most of the states are in recession in their legislative season until early next year, but there'll be plenty of opportunities for that. So give us a follow and we can help you get there.
Terrific. Well, thank you for your leadership on this. Kelly McKenna, the CEO of End Chronic Disease at endchronicdisease.org. Thank you very much for joining us live here this afternoon on Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz with Randy Wang. And then at 6, it's the Just Help One radio show and podcast here on 790 KBC.
Mic Drop. Hosted by former Navy SEAL Mike Ritland. It's raw.
Any single time that you left the wire, you could lose 4 guys.
It's unfiltered.
That was the most horrible screaming I'd ever heard. Taking a hit on the chin, you want to pay it back?
It's tough talk from the top minds in their field.
Would I choose to not do our duty as military fighting men? No, I would not make that decision, without question.
Mic Drop. Follow and listen on your favorite platform.